The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, the wheat market found some good support to kick off the month of July. Soybean oil as well found some good support, which kind of spilled over to the rest of the soy complex, while corn just continued to chop around and be in the doldrums a little bit. And the livestock trade was lower on Monday. What are we seeing in these markets as we kick off the month of July? Let's talk about it. Joining us now for market analysis, John Heinberg with Total Farm Marketing. And John, thanks for being with us here on a 4th of July holiday week as we got into the new month. You know, you look at one part of the grain screen, it looked pretty good. Then you look at corn and kind of you get sad again a little bit. But we did have some bright spots, I guess, out there on Monday's grain trade, John.
Yeah, it started with the wheat market getting a little bit of a bid there to start the day today and actually finished really strongly, put double digits higher. Again, so having just some profit taking there in terms of just squaring up on some positions. We're hoping to see a little bit of extra demand kick in. Export sales were pretty good last week for wheat, above expectations. And, I think we're just seeing some follow through there. And limited probably in scope in terms of the total rally, but at least some relief coming at us. Now, it'd be nice to see that trickle over into that corn market a little bit, as we did struggle just to even get the positive territory on some of the contracts today, as we're still dealing with Friday's numbers, which obviously were immensely heavy. Then you got the soybean market front end. The soybean market remains strong, and then it continues to see that bull spreading action. And then that strong bean oil market, fueled by that rally in crude today, help really pull that bean market out of the doldrums, at least put some positive gains on overall. But right now, my mindset, given the numbers the USA put in front of us, any type of rally here is going to need to be met with some type of selling pressure or just get some things moving. For especially in the corn market, the numbers we got on Friday were extremely disappointing.
Well, let's talk about corn and why didn't wheat help corn more on Monday? Funds were big buyers in the wheat trade, it looked like, but yet traditionally we see wheat, if it goes higher, it kind of helps that corn market, but that wasn't the case. Was it just that combination of those heavy numbers and just the fund positioning right now in corn and the weather outlook and all those things? Is it just too bearish to overcome? I mean, what's your thoughts, John?
First, let's look at some seasonal windows here. Wheat does typically get a little bit of a bounce in the July window. So we'll see how that kind of plays out as we're getting through the HRW crop, getting ready for a spring crop, and there's just a little pause there on those historical charts where corn, if a crop is in good condition and overall like ours is, and some numbers are heavy and the trend is selling down through the July timeframe. So I wouldn't be surprised if we actually saw some spreading in that regard today by the wheat, sell corn against it as a hedge, at least early in the session today. Just didn't allow it to go. I mean, the fundamental picture for corn right now with those extra grain stocks, extra acres coming in, just gets us extremely heavy. And it's just going to be real hard for somebody who's short this market to be concerned right now, especially with the way the weather also looks.
I feel the bad thing here is that you got those heavy numbers on Friday, and they were before all this flooding started to happen. We've kind of touched on this as well. It just feels like that barring something else that we don't see, this corn market, it just feels like it could be a little depressed here until we get towards, finding out what that final harvested acreage is. For instance, that just kind of feels like where we're stuck at right now in corn, John.
Very much so. I mean, even though those acres are flooded and lost in that regard, first off, picking up 1.5 million extra acres or 1.2 million extra acres puts us at 91.5. Now, I'm not sure what we're seeing for losses out there. We've had some say as high as 1 million acres is gone. Well, even with that still keeps the acre number at 90.5, which was still above expectations for Friday's numbers. So we're still looking at a fairly big supply of corn. It almost makes that acreage, that is lost. I don't want to say the word irrelevant because obviously it's not, but at least in terms of in terms of where the grain is and the total supply picture, that, hey, we can afford to lose a few 100,000 acres here or a million acres, and we're still going to have plenty of supply. Unfortunately for those producers, that's going to be affecting the price. You still got a lot of areas that are doing very well. We'll see crop ratings today. Now they're supposed to tick down a bit, but again, crop ratings typically do slide this time frame of the year. Then the big double whammy to the whole thing too, in terms of Friday's numbers, was that grain stocks report. You pick up an extra 120 million bushels there. Of that 5 billion bushels that they found in grain stocks, 3 billion plus was in producers' hands, almost 40% higher than last year. So that's a rally limiting position right there alone. So to me, you got the kind of the punch in the gut from the acres, and then you kind of get kicked in the teeth by the grain stocks. It just really makes this picture look heavy. You're looking at, barring any major changes or demand moves, things of that nature, carry out pushing 2.4 to 2.5 billion. And unfortunately, that is not 420 corn where we closed today for the December corn crop. So I'm going to spend the rest of the next few weeks on the defensive. Any rallies we do get just on short covering, because we saw those funds really attack the short side of this market last week. And that was on Tuesday. So they have Wednesday, Thursday, Friday to keep pushing it. Even if they do get a little bit of a corrective bounce here, it probably needs to be met with some form of selling pressure, either by cash sales or, building up the put base. Right now, one thing I'm looking at for puts, stepping out of the money, $4 puts, picking up 2 for 1 and kind of running a ratio. Because if we still hold these numbers in the fall, we could be looking at a corn price that's pushing the 350 the handle, or even a tick lower.
To your point so far, I think of the wheat trade with a nice rally to start the month on Monday. Have to think that with more harvest pressure on the way, things like that might be an opportunity to at least lock in some floors with some puts or some things like that, the wheat trade, John.
Yeah, I think you need to make sure you're staying on that defensive side there and reward any rally you get. You got 16 cents today. We'll see how much more room we have in that regard. But yeah, definitely we're still looking at a global supply, even with the Russian issues, that is going to be fairly heavy. We're still looking at U.S. wheat here, getting it ready for that. The next harvest of the SRW crop. Looks like we have a very good crop coming, given the ratings and things of that nature. And just from talking to producers, that they got a pile of wheat. I saw around here, just driving over the weekend, our wheat fields look beautiful. Wisconsin's not a wheat producing state. We have just more wheat for straw type purposes, but they are going to have a pile coming out of some of those fields. It just looks like a beautiful golden carpet with big heads ready to harvest.
Well, of course, we think about this too. That risk of trading futures and options can be substantial. Always want to remind folks about that. But some opportunities out here, it sounds like, in corn and wheat. Soybeans in particular, bean oil, we mentioned that, had a good day Monday to start the month. Palm oil's been moving higher. There's some rumors that Indonesia could put some tariffs on China and Chinese goods out in the trade. It just feels like bean oil right now is the big driver in this soy complex, John.
Yeah, it was today, and it's still only enough to help merit 7 cents on the new crop side, because, again, even the numbers there from the USDA weren't bullish. They weren't horrible bearish. They were just still kind of as is, which if we still don't see that demand kick in, we could see things push it, again to that close to that 500 million bushel carryout mark. We'll have to add in those extra grain stocks that we found there. Plus, the slight extra moving production as well. So we'll have to see how that kind of plays out. Obviously, beans are made in August, so the weather is still going to be a focus going forward. If we do see things turn, you could see a bit of a pop in the soybean market just because we can, if the weather looks a little bit threatening. Like the front end versus the back end heavily right now in the bean market, though. You saw it action today, bull spreading in both, soybeans and the meal markets in general, just because we still have a relatively decent front end supply that's in terms of tightness. And there's still some decent demand moving. We've seen it kind of pick up here a little bit the last few weeks. So that just might be enough to get a little bit of a bid. I would have liked to have seen that grain stocks number show a little less in farmers' hands than we had on that report Friday. I was a little surprised by that number. I thought more beans had moved, in that time frame, but apparently there's still quite a bit out there still looking for a home. And that still is always a limiting factor, is the amount of beans the producers hold.
Well, thinking about demand too, I mean, could we potentially get China or some other soy buyer to step into this US market maybe a little earlier than traditionally? Maybe that August window. I know there's not a lot of rumor out there in the trade though, so it bears watching, I think, if we can perk up some early demand for US soybeans, John.
And that may be something we have to kind of see and get count on. And we did get that sale last week, 120,000 metric tons of new crop to unknown destinations. So maybe that was China finally stepping into the marketplace. Obviously, we don't know. That's what everybody usually assumes when they see the unknown tag in the soybean world. But then I'm also taking a look at some things also hearing that Brazil might extend their soybean export program further into July into August. So there immediately is a counterweight to anything that we're trying to do, trying to compete against them. And again, we're still looking at a monster crop coming out of Brazil next year. So that window could be very, very small for those U.S. beans. We're hearing activity of China buying beans for March from Brazil next for new crop beans next year. And they're getting ample supplies now. So if there is a window they come to us, it could be quick and tight and close quickly, because then they'll focus those supplies into the 2025 crop out of Brazil. So again, I'm not counting on a whole lot here. It'd be nice to see some action in. I think a lot of it still comes down to what they need and where their demand is. I think there's some question marks on that right now in terms of the supplies available to them that they have inside the Chinese market overall. So that demand piece is going to be the key here. We're already struggling on the crush side. I know we have good crush numbers, but just to look at the amount of imports of used cooking oil and how much that's weighed on this marketplace already. We do need a little bit more clarity for the government in terms of some of these EPA programs for biofuels and that sustainable jet fuel to kind of maybe give this market some direction. But right now, just the general picture of supply, where we are, the condition of the crop, still keeps me on the bearish side. And again, same mindset. If we get some rally here based off of maybe that move in crude oil and soybean oil today, that's probably needs to be an area that producers need to attack on the defensive side, whether put sales or a combination of.
We're getting market analysis here today with John Heimberg from Total Farm Marketing. John, let's go to livestock. Not a good start to the month of July for cattle and hog futures. Well, hogs were green for a time early Monday, but then kind of faded as well. So I'm guessing the overall money flow just wasn't there to start the month. Your perspective on this cattle trade as we kicked off the week?
Yeah, a little surprised by the cattle market today. I thought we'd see a little bit more footing, but cash trade wasn't exactly explosive last week. We're talking steady, buck higher or so in some regions. Now I heard some targets that were put out there, some offers that were significantly higher that maybe didn't get reported. So I still think cash trade is still very strong here. We had a little bit of profit taking on Friday, followed through with some additional profit taking today. Some of that maybe all just tied to the June expiration and August coming in. Now we go look at it. You got mid 90 cash or 190 cash. You got August coming on, August at 184. June came off at 193.50. Still looks like there's some pretty good value out there. If somebody sold some cattle, maybe take a look at some August calls. Not a lot of time in it, but don't spend a lot. 190 call, about $1.50. Somewhere in there just to keep a little paper over top in case this thing decides to kick in and keep that upside open for you. But again, I'm still talking longer term, making sure we stay defensive, building that floor. The funds have finally started stepping back in, long 50,000 contracts on Tuesday last week. We're seeing a little bit of money flow. I'm not sure if we got enough here to really push it out. But you go look at the fundamentals also. Retail values, 326 on Friday on the close for choice carcasses. There's still some meat on the bone for the packer there, even at these cash levels. They continue to push this higher. So that's still going to be the biggest key for me is the consumer demand, where we at are in that side of it. The other side is a little bit cautious with the price where it is, producers being concerned. Do we see more cattle coming into the market, getting pulled ahead to meet that cash market, just in case this thing does decide to top out again. So looking for some more strength in that cattle market. So we'll see. Hogs, on the other hand, still just continue to struggle. carcasses down to 97, which is still a good number, but off of last week's levels. Cash market or cash index was softer again today. Now we saw that get reflected in the second months of the year, with August down over $1 today after trying to get a little bit of positivity. So to me, it just looks like that hog market is about ready to make one more leg here to the downside. Hopefully I'm wrong, but the fundamentals and the past, just the pattern that we're seeing in this market is pointing that way at this time frame.
How about that dairy trade as we kick off the month of July? Any notes for us there, John?
Charts are a little on the defensive here, so be careful. You got some decent value. Now we'll see how that finishes out. Maybe today we had a nice little break to the downside, did rally back, but cheese trade's been trending softer here. Feels like we got a little bit more room for this market to continue to fall, maybe more in the August, September, October contracts than the front end July. But again, you're still over $20 in those third quarter months, so it's probably a great place to make sure you got that floor put in. Just don't like the trend in the cheese market. Just don't like the way the chart looks, period, in terms of running off that high, giving back some pretty good value. Now we're consolidating into a downward trend. It just looks like a tire market here that may have a little more room to go before we find ourselves in near-term bottom.
All right, John, so we wrap it up today. Any final thoughts or anything you want to reiterate to folks listening in here on the show?
Stay aggressive in here. I know these aren't prices that people want, but make sure we're looking outside past what's in your window in this area. There's a lot of very good crop out there. I know we've got our wet holes and the flooding, and we got issues there. And I hear it every day from people in the have-not areas, or why is this like this? How come? Look at my crops. But for every one or two I've heard that from, I've got 5 telling me how amazing things are looking this year. And boy, we caught a key rain and everything just keeps pushing. So in the long run, a lot of times that good will outweigh the bad, unfortunately, for the people in those situations. So with that, stay active in your marketing plan, okay? Markets don't have to be rational. Sometimes they can continue to move just on momentum. Right now, the selling side is in control. And if I'm sitting on a short position in this market, given the weather, given the supply picture, given even the demand concerns, I don't have a lot of fear at this time frame to get out of that short position and even add to it if the market does rally. So that's one thing I'm thinking about, is just make sure you get a pop. If you get some recovery, defend it somehow, and try to think of things that can maximize your return, because I do think we do have an opportunity for both these prices, corn, soybeans, and wheat, to continue to fall here maybe after some correction.
Try to look past that backyard-itis. I think that happens every single growing season. John, if folks want to reach out to you there at Total Farm Marketing and talk about their marketing plan, how can they get in touch with you?
Feel free to give me a call, 800-334-9779. Shoot me an email at jonh@totalfarmmarketing.com. And again, don't forget that website of ours, totalfarmmarketing.com.
John, have a fantastic 4th of July holiday week, and we will talk to you again next week. Thanks for being on.
Sounds good. Have a great week.
That's going to do it for Market Talk. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@markettalkag and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.